This is Accounting Paper 1 for AC1, January 2020. Question 1. Where would the account of a credit supplier be found? You know that credit supplier means trade payables. So, where the account of trade payables would be recorded? Options are payables ledger, purchases returns book, receivable ledgers, or sales day book. Option A would be the correct answer. Payables ledger is also called purchase ledger, and it contains the personal accounts of an organization credit suppliers. Option B, purchases returns book. This would be incorrect because it is a book. It does not include any account, but it records the goods returned by business to its suppliers. Option C, receivable ledgers. This is also incorrect because it is a sales ledger that contains the personal accounts of an organization customers. And sales day book was incorrect because it is a book made to record the credit sales of goods for a period. So the correct answer was option A. Question 2. Which one of the following source documents would show bank interest? What is source documents? Source documents are the proof of transactions. So from where the bank interest that is recorded in the income statement, the amount is collected from where? These are the options: bank statement, check counterfoil, credit note, or invoice. Option A, bank statement, would be the correct answer. The amount of interest charged or provided could be obtained from the bank. The bank provides the bank statement that shows the amount of interest, bank charges, etc. So, bank statement is the source document from where the bank interest is recorded in the financial statements. Check counterfoil. What does it mean? It is a part of check kept by the account holder at the time of issuing checks. So, it is a source document when money is paid through the bank. Credit note is a source document for sales and purchase returns. Invoice is a source document when a purchase or sales have been made on credit. Whether a goods or other things have been purchased or sales in credit, invoice is prepared. So, from here our correct answer was option A. Question 3. Which will be recorded on the debit side of a trade receivables ledger control account? That means these are the entries given which is recorded in the debit side. If you know the format of a trade receivables control account, which entries are debit and which entries are credit, then you can easily identify the correct answer. You can see the debit entry are those that increase the amount owing from customers or trade receivables, and credit entry are the entries that reduces the amount owing from the trade receivables. Option A, credit note. Credit note means sales return or purchase return. In trade receivables control account, credit note means a sales return. So you can see sales return is recorded in the credit side, not debit side. So option A is not correct. Option B, discount allowed. This also reduces the amount owing from trade receivables. So it is credited, but we need to find the debit item. That's why option B is also incorrect. Option C, irrecoverable debt. You can see it is also recorded in credit. So option C is also incorrect. Option D, return check. Return check means the check dishonored or which had not been passed but has been received from the customer. So this is a debit item. Correct answer is option D. Question 4. Inventory should be valued at the lower of cost or net realizable value. That means in accounting, inventory should be recorded at cost price or net realizable value, whichever among these two is lower. Net realizable value means the selling price less any cost associated with the selling. So, why inventory should be recorded at lower of cost or net realizable value? Which accounting concept is this an application of? Accruals concept, consistency concept, materiality concept, or the prudence concept? Option A, accruals concept, is the incorrect answer. Because accrual concept in accounting means that expenses and revenues are recorded in the period they occur, whether or not cash is involved. Because of accruals concept, advance and owing adjustments are made, not the valuation of inventory. The second one, consistency, this is also incorrect. This concept requires that a company's financial statements follow the same accounting principle and methods from one accounting period to the next. Because of this concept, the depreciation method is not changed from year to year. If a straight line method is used, the same method is used for several years. Option C, materiality concept. This would also be incorrect because this concept states that a company may violate another accounting principle if the amount is small enough that the financial statements will not be misleading to others. Usually, purchase of non-current asset should be recorded in the statement of financial position as an asset. But if the asset value is very small, like a stapler machine, ashtray, it could be shown as an expenses. That is called materiality. The final option, prudence concept, would be correct because this concept states that a business should not overestimate the assets and revenues, and it should not underestimate expenses and liabilities. Therefore, you can see inventory is an asset. The asset is not overvalued. That's why it is written at lower cost. If cost price is lower, it is recorded in cost price, or if the net realizable value is lower, inventory should be valued at net realizable value. So the correct answer is option D. Question 5. Where is the total of the discount column on the credit side of a 3-column cash book posted? You know that discount received and discount allowed are the two discounts that is recorded in the 3-column cash book. Discount received is an income. Incomes are credit. So, the credit side of cash book records discount received. Discount allowed is an expense. Expenses are debit. So, it is posted in the debit side of a cash book. Let us now see which of the options are correct. Option A, credit discount allowed. This is obviously incorrect. Discount allowed is debit because it is an expense. Here it is said that credit discount allowed, so it is incorrect. Discount alloweds are recorded in the debit side of a cash book. Option B, credit discount received. This would be the correct answer. Discount received are credit, and it is also recorded in the credit side of a 3-column cash book. Option C, debit discounts allowed. Discount allowed is debit because it is expense, so this is true. But this option is incorrect because it is not posted in the credit side of a 3-column cash book. You can see the requirement was, where is the total of the discount column on the credit side of a 3-column cash book posted? Discount allowed total is not posted in the credit side. It is posted in the debit side of a cash book. That's why option C is incorrect. Option D, debit discount received. You can see discount received is credited. That's why this option is incorrect. Therefore, the correct answer from here is option B. Question 6. Which one of the following is not a principle of professional ethics? That means 3 options from here are principle of professional ethics, and only one is not a principle of professional ethics. You need to identify that. Before that, students, you should know what are the principles of professional ethics. The principles of professional ethics are classified into 6 categories: integrity, objectivity, professional competence and due care, confidentiality, adopt professional behavior, and the final is public interest. So option A, confidentiality. This is a principle of professional ethics. You can see it is given in chart. So this will be incorrect. Option B, integrity. This is also given in the chart. So this will be incorrect. Option C, materiality. This will be the correct answer because materiality is an accounting concept. And option D, objectivity. This was also incorrect because it is also given in the chart and it is a principle of professional ethics. Therefore, the correct answer is option C. Question 7. Which one of the following errors would require a correcting entry in the suspense account? Students, first of all, you should know when a suspense account is opened. There are some errors that does not include the suspense account. That means if these errors are made, it cannot be catched or it cannot be identified. The errors you know: error of omission, error of commission, error of principal, compensating error, error of original entry, complete reversal of entry, transposition errors. So when a suspense account is open, the suspense account is open when the following errors are made, and the suspense entry is done for the correction of errors. What are the errors? When a single side entry, for example, a credit entry has been made but no debit entry. Debit and credit entries have been made but at different values. 2 entries have been made on the same side. An incorrect addition in any individual account. Finally, if opening balance in any account has not been brought down. If these errors are made, then a suspense account is opened. Let us now analyze the errors. Option A, credit note entered twice in the books of account. Credit note means returns, purchase returns or sales returns. It has been recorded twice. This will be incorrect because you can see No such errors are included here. In number 3, it is given two entries have been made on the same site, but in option A, it is not given that the credit note has been entered in the books of account in the same site. That's why option A, error, would not require a correct entry in the suspense account. Option B, incorrect addition of the total column of the sales day book. In the sales book, there is a mistake in the addition. This would be the correct answer. Because of this incorrect addition, error will be on the sales account only. Trade payables or cash amount, which is the another entry, would be correct. You can also check that it is given in the option here, an incorrect addition in any individual accounts would require a suspense entry. That's why option B is the correct answer. Option C, payment for stationery posted to office equipment account. This type of error is called error of principle. When one category, that is expenses, has been included in the asset account. This error does not include suspense account. Option D, sales invoice not entered in the books of account. This would also be incorrect because this is called error of omission. Because a transaction is omitted, sales invoice is a source document. When a source document is not entered, that means the journal entry or any other transaction has not been made. So omission has occurred. And omission is not required for a suspense account. Therefore, the only correct answer from here is option B. Question 8. Seth has $15 left in the petty cash box and vouchers totaling $25. How much does Seth need to restore the impress? What is vouchers? First, you need to understand that vouchers are used as a proof of payments. That means total payments made by Seth from the petty cash book is $25 because vouchers total is $25. These are the options given. How much Seth need to restore the impressed? Option A is $10. This would be incorrect because the requirement is how much Seth need to restore the impress. Restore the impress means Seth needs to collect amount equal to the expenses made from the main cashier. You can see the amount of expenses is $25. So $10 is not the correct answer. Option B, $15. This would also be incorrect answer because this is the balance remaining in the petty cash book, not the amount to be restored. Option C, $25. This would be the correct amount. Always the amount restored is as per the amount of expenditure. Option D, $40. This was incorrect because $40 is the total amount of the impress system. How it is total? Balance CD is $15 and the expenses is $25. That means at the starting Seth has $40. Our requirement was to how much Seth needs to store. Seth needs to store $25. Option C is the correct answer. Question 9. A trader withdraws cash from the bank for his own use. Anything withdrawn for personal use or own use means it is a drawing. Cash has been taken from the bank, that means money is going out from the bank. Requirement is which one of the following is a correct entry for this transaction. This is a journal entry given. One is debit, another is credit. We have to identify what is the correct entry. Bank debit, drawings credit, cash debit, drawings credit, drawings debit, bank credit, or drawings debit, cash credit. You can see option B and option D would be incorrect because cash is not included. Money is going out from the bank. So we have option A and option C left. This is the journal entry for this kind of transaction. Drawings is debit because drawing means a reduction in capital. If capital is decreased, it is debit because an increase in capital is credit. Similarly, bank is credit because an asset is decreasing. A decrease in asset is credit. That's why drawings debit and bank credit would be the correct journal entry. Answer C is the correct option. Question 10. Which one of the following shows the effects of omitting the depreciation charge? That means the depreciation has not been charged. What would be the effect on the non-current assets and profit for the year? These are the options given: overstated and understated. Overstated means recorded in higher value and understated means recorded in lower value. Students, you should know that depreciation charge is an expense which is deducted from the income statement, and it is also deducted from the non-current asset cost in the statement of financial position, previously called balance sheet, to give the net book value of the non-current asset. If depreciation is not made, that means the amount of non-current assets and profit both would be overstated, higher. This is given in option A. Both are higher, that's why option A is the correct answer. Option B is incorrect because non-current asset would be overstated, that is correct. The profit will also be overstated because the expense has been omitted. Option C is incorrect because here you can see non-current asset is given understated. The non-current asset is also overstated since the depreciation is not deducted from the cost. And option D was also incorrect because understated occurs when a greater amount is deducted. Here, no amount has been deducted. That's why it is not understated, but it is overstated. So the correct answer is option A. Question 11. Complete the document where indicated. You can see this is an invoice copy given, and these are the blank figures in your answer booklet. You will see a dash mark in each of these spaces, so you have to fill up this space. You can see here you have 5 boxes, 1 2 3 4 5, so you have 5 marks. The first one, you need to calculate the total cost. The total cost is find out by multiplying quantity with unit cost. For the CD cases, you can see the quantity is 150 and unit cost is 1.20. Multiplication will give you 180. You may write 180 or 0.00. Both are correct. Similarly, for CD label sheets, the total cost would be 400 multiplied with 0.40, which is $160. Now you need to find the total. Total means adding 180 plus 160, which is 340. Then there is a trade discount. Trade discount of 20% is applied on the subtotal amount. Remember here, many students do this by mistake. They add this, but trade discount should be deducted. So if you write in bracket, you will avoid the silly mistake. 340 multiplied with 20% gives 68, and 340 less 68 is 272. So from here you get the 5 marks for this simple calculation. Then we have question 12. Complete the table indicating with a tick mark whether each item is capital expenditure or revenue expenditure. Here you can see 5 items are given. You have to identify either it is capital expenditure or revenue expenditure. Similarly for the second one, third, fourth and fifth, whether it is capital or revenue. Whatever the answer, you have to give a tick mark. Let me first explain you what is capital expenditure. Capital expenditure is the cost associated with buying or adding value to a non-current asset. So what is buying? Remember, the buying cost of non-current asset includes all those expenditures up to the asset becomes ready for use. This all will be included in the buying. If the business is purchasing an asset from overseas, from foreign, then all the cost, the purchase price, the delivery cost to bring the non-current asset from foreign country, the import duty, etc., all will be included in the buying. That is given here. Then what is revenue expenditure? You should know that revenue expenditure are those expenditures that does not increase the value of non-current asset. It is not associated with the increase in value of non-current asset, but it is incurred in the day-to-day running of the business. You know, revenue expenditures are included in the income statement as expenses. So these are the normal expenses. So let us now identify which is capital and revenue expenditure. Delivery cost of a new motor vehicle. Remember, this is the delivery cost for the new motor vehicle. That means the cost associated from bringing the motor vehicle from foreign country or showroom to the business. Without this cost, the motor vehicle was not ready for use. So this is a capital expenditure. Second one, motor vehicle insurance. The insurance is done for the safety of business, for the smooth running of business. Without insurance, the motor vehicle can still run. It is still ready for use. So motor vehicle insurance is not a capital expenditure, but it is incurred for the day-to-day running of the business. And you can also see the insurance does not also increase the value of motor vehicles. The value of motor vehicle is same. Because of insurance, the business is running smoothly. The risk is covered. So insurance costs are expenses. So it is revenue expenditure. Third one, installation cost of a new machinery. Without installation, the machinery would not run. Without installing, the machinery is not ready for use. So this is the buying cost for the assets to become ready for use, and this is capital expenditure. The fourth one, legal cost on purchase of business premises. A business premises is also a non-current asset. That means the land or the place where the business building is associated. This is a legal cost. If this cost is not paid, then the business premise cannot be purchased. It would not be legal to use the business purpose. So, to make the business premises ready for use, this expenditure has been made. So, this is a capital expenditure. The last one, bank interest on loan to purchase business premises. You know, the loan is taken to finance big expenditures, and interest on loan is an item of income statement expenses. Also, you can see if interest is not paid for 1 month, 2 months, 3 months, the premises can still be used. So, interest on loan does not have any relation with the use of premises, and it will be regarded as a revenue expenditure. You can cross check. The interest on bank loan does not increase the value of non-current asset, and interest loan is a day-to-day running of the business. It is a monthly expense or yearly expense. So these are recorded as revenue expenditure. So for 5 correct ticks, you will get 5 marks from question 12. After that, we have question 13. It says that Hong maintains a provision for irrecoverable debts at 4% of trade receivables. The balance of the provision at 1st November 2018 was $965. This is the provision calculated in the previous year. That means the previous year ends on 31st October 2018. So the new balance is 1st November 2018, 965. At 31st October 2019, the balance of Hong's trade receivables ledger control account was 23,620. You know, the control account, trade receivables control account shows the balance of trade receivables. So 23,620 is the trade receivables, of which $170 was irrecoverable. That means this is the bad debt. This has been decided it will be irrecoverable, cannot be recovered. Let us look what is the requirement. Calculate the balance on the provision for irrecoverable debts account at 31st October 2019. This is the provision at 1st November 2018 already given. You have to calculate the provision at 31st October 2019. How it is calculated? The formula is net trade receivables multiply with the percentage given. Here 4% is given, and net trade receivables will be 23,620 less 170. In this way, you get 938, the balance of provision for irrecoverable debts at 31st October 2019. Requirement B is to prepare the provision for irrecoverable debts account. The account is given here. You need to show the transfer to the income statement and also balance the account and bring the balance down to the next period. Students, many have confusion here. So let me clear you that provision for irrecoverable debts has an opening balance in the credit side. Okay. Why? Because you know it is a reduction in the asset, trade receivables, and a reduction in assets are credit. That's why you should start with the balance BD in the credit side. The balance BD is the opening balance 965 already given in the question. This is the balance of the provision accounts given at 1st November 2018, 965. So we put this amount here, and we have calculated the closing balance at October 31st, 2019 in requirement A, 938. You should know this one, that balance CD is recorded in the opposite side of balance BD. If balance BD is credit, balance CD should be debit. Here you can see 965 and 938. The greater is 965 and the difference is 27. Remember student, always the difference figure is income statement in provision for irrecoverable debts account. This may be in debit side or credit side. For your information, let me tell you, if it is in the debit side, that means it is a decrease in provision for irrecoverable debts and it is added with the gross profit as other incomes. So here we have completed the account. Now bring the balance down. Balance CD against become balance BD and the date is November 1st, 2019. Remember, you need to give the dates to obtain the full 3 marks. That's all for section A. You get the 25 marks from here. Now let us solve section B for paper 1 of January 2020. Question 14. Isabella owns a business selling clothing. State the business document and the book of original entry for each transaction in Isabella's books of account. This is the transactions. For each transaction, you have to name the business document and the book of original entry. What is business document? A business document is also called source document. That means it is a proof that a transaction has occurred. And book of original entry means the first book of accounting where the transaction is recorded. Let us read transaction 1. Purchased a new motor vehicle on credit $5,000. Anything purchased or sold on credit is recorded in the invoice. Here you may write purchase invoice or a normal invoice. It will give you 1 mark. Where it is recorded? It is a purchase of non-current asset. So it should be recorded in the journal. If a purchase of goods have occurred, it should have been recorded in the purchases day book. Now we record this in the journal because of non-current asset. Transaction 2. Purchased postage stamps $3. You can see postage stamps is of a very small amount. So this will be recorded in the voucher. Anything paid through cash will be recorded in the voucher. You may write petty cash voucher because this is a small expense, or only voucher will also give you marks. Small expenses are recorded in the petty cash book. That will be the original entry, not cash book. Remember, if you do a journal for any expenses, you write the expenses in debit and cash in credit. Here, cash will be credit, but petty cash will be the actual credit. Then the last transaction, sold goods for cash. When a cash is coming, you issue, or the business document issued a receipt. So receipt will give you 1 marks, and where it is recorded? The amount received is recorded in the cash book. Because this is a good amount, a higher amount is recorded in the cash book, small amounts are recorded in the petty cash book. So for writing this, you will get 6 marks. Then requirement next is, on 1st December 2019, Isabella was owed $480 by Shania, a credit customer. During the month of December 2019, the following transactions took place. Isabella owed $480 by Shania. You can understand that Shania is a credit customer, which means a trade receivables, and you should know that trade receivables accounts are starting from debit. Let us read the transactions that took place during the month of December. December 9, sold goods on credit to Shania $195. That means it is a entry recorded in the sales day book. Then December 14, Shania returned goods $35. That means it's a sales return occurred. And the last one, Shania paid the balance owing at 1st December 2019 by check after deducting 5% cash discount. The balance on 1st December 2019 is 480. So if we apply a 5% discount, the amount of discount will be 24. Amount received will be 480 less 24. Let us do the journal entry. If you do the journal entry for December 27 transaction, the amount received from cash book will be 456. 480 less the discount of 24. And the journal entry for the discount will be discount allowed, because Isabella is the owner. Isabella is recording all these. So Isabella has allowed his customer a discount. Discount allowed are debit. You debit the amount 24. You can see the total of debit is 456 plus 24, 480. So credit should be 480 and account receivables have decreased. That means our asset decrease is credited. This is the journal entry. We have done this to prepare the account of Shania in Isabella's books of account. You can see you have to prepare the account of Shania. Then you need to balance the account at 31st December 2019 and bring the balance down at 1st January 2020. Let us just start this account now. Remember, first you have balance BD. Trade receivable accounts have a balance BD or a opening balance in the debit side. Shania with the trade receivables have an opening balance in the debit side. Then a sales transaction has occurred on December 9. December 9 sales day book. You may also write sales, but the correct entry will be sales day book, because credit sales are recorded in the sales day book. So 195 in the debit, because sales are credit and Shania account is debit. This is a double entry. Then the transactions that reduce the balance owing should be credited. Sales return, it is the opposite of sales, so it is recorded in the credit 35. And you can see the journal. In Shania account 480 should be credited, but what should be the entry? For cash book 456 and discount allowed 24. This both should be credited. Cash book 456 and discount allowed 24, both are credited. Now let us balance the account. The total is 675 from the debit side we have got, but in credit it is not 675. You need to deduct 675 from 35, 456, 24, and you will get the difference 160. This is called balance CD, and this is the amount owing from Shania. Let us bring the balance down. Bring the balance down to the next date, 160. So you can see here 6 marks, and for correct dates and names you will get 1 more mark, 7 marks. Remember to write the dates to obtain the full marks. Then requirement C is state one purpose of a statement of account. What is a statement of account? Let me show you an example. You can see this is a statement of account of Shania. Just now we have prepared the Shania account. The balance BD is written in this way. Then sales. You can also call this is a running balance format of T account. What is the difference here from T account is that the balance is updated after each transaction. And in the statement of account, the details of customer and supplier are both included, and also the payment terms are included. You can see just now we have calculated that the balance CD was 160. Here also the balance CD is 160. That means this is owing from the customer Shania. Isabella has sent this account to Shania. Why? To inform the customer of the outstanding balance on their account. To inform the customer, Shania, what is the amount due to Isabella. Or another reason you could name that to remind the customer to settle their account. When the customer will see this statement, he will be reminded to settle the amount due. That could be another purpose, but any one purpose will get you 1 mark. Just for your reference, we are giving different purposes. Another purpose you can mention to cross-check the amount. Shania has obviously also prepared a T account. So when Shania will receive the account from Isabella, she can cross-check whether the entries are correct or not. So these could be the purposes of a statement of account. Any one would be the correct answer. The next account was a remittance advice. State one purpose of a remittance advice. What is a remittance advice? You can see this is a sample of remittance advice to Isabella from Shania. Date is 27/9/2019. What happened? You can check. In 27 December, Shania had paid this amount. That means this is a document that shows the amount paid. The amount has been paid to Isabella. This is the bank information, and this is the amount paid from Shania, the bank information. The amount was 454. Here the discount is also mentioned. Invoice number is also mentioned regarding which invoice this payment has been made, and the bank charges. That means a bank charges a specific amount when a transaction is occurred. So this is a sample of remittance advice. You can see a remittance advice is a document sent regarding the payment. So you can write here to inform the supplier of the transaction being settled. Or you may also write to show the proof of payment. That is the purpose of remittance advice. Question 15. Complete the following sentence. The main purpose of a trial balance is to check the dash of the double entry. You have to write here the complete word. You will get 2 marks. What is the purpose of a trial balance? First of all, in trial balance, you should know that asset and expenses are debit, income, liabilities and capital are credit. The total of debit and the total of credit in the trial balance should always be same. What happens when it is same? If the arithmetic total of the trial balance matches, it means that the double entry or the ledger accounts are accurate. So this is the purpose of trial balance, to check the arithmetical accuracy of the double entry accounts. So for these 2 words you will get 2 marks. Requirement B. Identify the type of error in each case. These are the errors given. You have to name the errors. You know the different type of errors. Error of commission, error of omission, error of principal, complete reversal of entries, error of original entry, transposition error. These are the different types of error. Let us read the error. A payment for motor expenses had been posted to the motor vehicle account. That means an expense has been recorded in the asset account. This is called error of principal. Error of principal occurs when there is a mistake in the category of account. Expense is one category and assets is one category. So expense has been recorded in the asset account. This is the error of principle. Second, a payment for general expenses had not been recorded. When a transaction is not recorded or is fully omitted from the books, we call it is error of omission. It is very easy to remember from the word omitted. Omitted means not recording. So from omitted, error of omission occurs. Error of omission occurs when an entry has been completely omitted from the books. Let us read the last error. A payment for general expenses had been posted to the motor expenses account. Here you can see the category is correct. Both are expenses, but instead of one expense, it has been recorded in the another expense. This is called error of commission. Error of commission occurs when there is a mistake in the personal account or individual account. So instead of individual account general expenses, it has been posted to motor expense account. The amount, the category, everything was correct, only it was mistake in the individual account. This is called error of commission. From here you get 3 marks. The next requirement is complete the trial balance at 31st December 2019. Any difference should be entered in the suspense account. You should know that the trial balance should agree. But there are some cases where the trial balance does not agree and there is a difference either in the debit side or in the credit side. Then we write that difference as suspense. And later on, the suspense or the errors are then investigated. So here they have provided you a balances. You have to complete the trial balance, post this in debit or credit side, and the difference should be recorded as a suspense. When you record the suspense, you can see the total will match. That means first you have to find the total and the difference amount will be suspense, either in the debit side or credit side. Let us now put these balances in the debit and credit side. To do this, first of all, you should know that in trial balance, assets are debit, expenses are also debit, liabilities are credit, incomes are credit, capitals are credit. These are the 3 credit items and asset and expenses are the debit items. The first one, bank overdraft. That means more amount has been drawn from the bank. So you need to pay this to the bank. It is a liability and liabilities are credit. Carriage inwards. Carriage inwards is an expense incurred during the purchase of goods. This expense is added with the purchases. Anyway, expenses are debit, so 880 debit. The next one, discount allowed. This is also expense. Discount allowed means taking less money from the customers. Expenses are debit. Drawings. Drawings mean the owner has taken some money from the business. So it is opposite of capital. If capital increase is credit, then decrease in capital should be debit. That's why drawings are debit. Equity. Equity is another name of capital. Capitals are credit, 9,090. General expenses. Expenses are debit. Inventory. That means this is a asset. Asset balances are debit. Irrecoverable debts. That means this is an expense. The amount from customers will not be received. Expenses are debit. Motor expenses, same, expenses are debit. Motor vehicle cost. This is the asset cost given. So assets are debit. The next one is the provision for depreciation. The provision for depreciation means this reduces the assets value in the accounting books. So decrease in assets are credit. You may need to know that provision is a kind of liability. So liabilities are credit. Purchases, this is a purchase of goods. Purchases of goods are expenses. Cost of sales, so it is debit. And return outwards is the opposite of purchase. That means the trading cost is reducing, so it is credit. Revenue is an income. Incomes are credit. Trade payables, that means the business need to pay this amount, so it is a liability. Liabilities are credit. Trade receivables, the business will get this amount, so it is an asset of business, not yet received. Assets are debit. And now suspense is remaining. You need to find the suspense after total. So let us total the amount. You can see the total will be 104,040 in the debit side. But in the credit side, it is not 104,040, but still you need to write this because the totals are same in trial balance. The amount in credit side is 103,770. So if you deduct 104,040 from 103,770, the difference is 270, which is posted in the credit side. So you get the full marks from requirement C. Question 16. Omar provided the following information relating to his trade payables ledger control account for the month ended 30 November 2019. Let us look what is our requirement. Prepare the trade payables ledger control account for the month ended 30 November 2019. Balance the account on this date and bring the balances down at 1st December 2019. That means you have to do balance CD and also then balance BD. This is trade payables ledger control account. One thing you should know that trade payables control account records transactions related with credit purchases only. It does not include the cash transaction. Let us look in our previous page what are the transactions. 1st November 2019, that means balance BD is given in the credit side 46,935 and debit side 290. Let us put this amount. Balance BD, credit side 46,935 and debit side 290. Then let us look at the next information. This is for the month of November 2019. These transactions have occurred. Number 1, cash purchases. Remember, cash purchases are not included in control account. So the next one is credit purchases 36,940. We should include this here. 36,940. It should be recorded in the credit side. It is recorded in the credit side because you know that transactions that increases the trade payables amount are credit, and the transactions that reduces the trade payables amount will be in the debit side. So we record this in the credit side because more purchases means more amount is owed to the suppliers. The business need to pay more amount. So trade payables are increasing. The next one is the discount received 612. So it reduces the trade payables. It should be debited. Then the next one is interest charge 266. It increases the trade payables amount, so it is in the credit side. Then the next entry is payments to credit suppliers 32,418. Students, you should know that payments will reduce the amount of trade payables because the payment has been made. So it should be recorded in the debit side. The name will be cash book because payments made are recorded in the cash book. Amount was 32,418. The next one was returns outward 358. Returns outward will also reduce the amount payable to trade payables because the purchase cost is less. So it is a debit. Let us look at the next entry. Trade receivables ledger set off. Set off means the payables account has been cancelled out from the receivables. This payable has also purchased some goods from the business, or you can say business has also sold some goods to the supplier. That's why set off is recorded in the debit side 220. Let us look at the last one. At 30 November 2019, this was the debit balance 135. Now many students do the mistake here. They write it in the debit side. Remember, these balances relate to the opening balances. The question provides you the opening balances. So, this is the opening balance given for the next month period. That means closing always become opening. So, the question has provided you the opening balance. The opening balance is in the debit, amount is 135. So 135 recorded in the debit side as an opening balance. Don't do the mistake by writing it in the debit side at balance CD. It should be balance BD. You know, the opening balance is recorded in the opposite side of closing balance. So the closing balance will be 135, same amount, in the credit side, because this has become debit in the next month. Now total the amount. If you total the both sides, you will see there is a missing figure in the debit side. The amount is 50,378, and this is the normal balance of the trade payables ledger control account. This was the usual balance, and similarly this was the usual closing balance. As per the question, bring the balance down to 1st December 2019. You bring the balance down that you have calculated to 1st December 2019, 50,378. Now here you may have the question, why the balance BD is in the both sides and why the balance CD is also in the both sides. This answer will be find out in the next part of this question. Part B was state one possible reason why Umar has a debit balance on the trade payables ledger control account. You have already seen that it should have a credit balance. This was the normal amount. Why still it has a debit balance? Both here, you can also see debit balance is 135, which is very uncommon, and this is a normal credit balance 50,378. So why Umar may have a debit balance? This is the requirement. Only 1 mark. Usually trade payables control account have a credit balance because money need to be paid to suppliers, and you know payables are liabilities. Let us identify why it is now debit. The reason, first one is Umar may have overpaid a credit supplier. If Umar had overpaid, that means Umar will get the money from the supplier. Money will not need to be paid, but Umar will get money. That's why it is now debit. You can also write one more reason. Umar have returned the goods after the account was settled. The account was nil, and after that Umar has returned the goods. In that case, Umar will get the money for the goods returned. So this will be asset. That's why in the debit side. One more reason you could write, Umar may have make an advance payment for the next goods. Umar may have booked the goods for next shipment. In that case, this is a debit balance because the advance has been paid to suppliers. Anyone would be your correct answer. The last requirement is explain 2 reasons for preparing a trade payables ledger control account. That is the purpose of trade payables ledger control account. It provides the total figures for trade payables which can be used to prepare the financial statements. That could be 2 reasons. You know that the trade payables ledger control account difference figure balance CD is the total of the trade payables and it is used in the financial statements. It is given here. You may also write another reason that it helps to prevent fraud as the control accounts are normally produced by a different person to those who produce the subsidiary ledger accounts. They are trying to say that if the two totals, that means balance CD of trade payables control account and the total of all the accounts in the purchase ledgers does not matches, then there is a chance of fraud or errors. So by preparing the control account, if the both balances are matching, then it helps to prevent the fraud. You can also write this point to get another 2 marks. In this way, you will get the full marks from question 16. Question 17. Marcus maintains a 3-column cash book. On 1st December 2019, the balances were bank $340 overdrawn and cash $70. That means this is the opening balances for bank and cash account given. The following transactions took place in December 2019. These are the transactions at each date, and this is the requirement. Enter the transactions in the 3-column cash book on page 17. Balance the cash book at 31st December 2019 and bring the balance down at 1st January 2020. That means you have to do balance CD and balance BD. Let us look at page 17. This is the cash book already given in the answer booklet. 3-column means it has a column for discount, cash and bank both in debit side and credit side. This is called 3-column. Students, you should know that amount received is recorded in the debit side and amount paid is recorded in the credit side. If the amount is paid through cash, it will be recorded in the cash column. If it is paid through bank, it will be recorded in the bank column. Same for the amount received. Let us now start the cash book. First of all, you need to put the opening balance. Here you need to know that the bank is overdrawn. Usually bank are assets. So assets are debit, but in this case the bank has been overdrawn. That means it is a liability. So liability should be credit. And cash balance is as usual in the debit side. Cash cannot be credit. So we put the opening balances. Cash 70 in the debit side and bank 340 in the credit side. Let us look at the next transaction. On December 4, received a check from Patel, a credit customer, $125. That means this is the amount received and check means bank column. So it will be posted in the debit side of the bank column 125. Check was received from Patel and this is the date. Let us go back and check the next transaction. Sold goods for cash 2,350. When goods are sold, you know there is a receipt of cash. So cash is received 2,350 from cash sales. Let us go back and check next transaction. December 12, paid cash into the bank 1300. Remember student, this is called a contra entry because the cash account will decrease and in the same date the bank account will increase because cash is deposited in the bank and cash is reducing. This is called a contra entry because there are two transactions in the same date. So you can see the cash has decreased because cash paid into the bank. Cash has decreased 1300 and the name will be bank. Why it has decreased? Because it has been deposited in the bank. Many students do the mistake here. You need to focus on this. Cash has decreased, that's why it is amount paid in credit side, and the bank has increased, the amount has been received in the bank, that's why bank is 1300 debit, and the name will be just opposite. For the bank column you will write cash and for the cash column you will write bank. In this way this transaction will be easier for you. Let us go back and check the next transaction. December 13, received notice from the bank that the check from Patel 125 had been dishonored. Don't do the mistake here. Here a notice is received, not any amount. What notice is received from the bank? That the check of December 4 has been bounced or it has been dishonored. Dishonored means it has not been passed, so the bank should be now in the credit because in December 4 we have debit the bank. Since the check has not passed, so it should be now credited. December 13, same entry, Patel 125 but in the credit side. Let us go back and check the next transaction. December 19, paid by standing order to West Gas $85. Standing order is an instruction from the owner to pay regular amounts. So this has been paid. It should be recorded in the credit side. The name will be West Gas and standing order means the amount has been paid from the bank. You should be confused where it should be put. Standing order is an instruction to the bank to pay the payments. That's why standing order, direct debits, these should be posted in the bank column. Let us look at the next transaction. December 23. Receive a check from Sumner 1140. This is the amount of check received in full settlement of an invoice after taking 5% cash discount. Here a cash discount has already been deducted because this was the amount received. We do not know the amount of the invoice, but we know the amount of the check received, 1140. And here a 5% cash discount has already been deducted because the amount is received after taking the cash discount. So you can say that 1140 given is the 95% of the invoice amount. If 1140 is 95%, we divide this with 95%. So we get 1%, and to calculate the 5% cash discount, you need to multiply with 5. In this way, you get $60. Or if you would have multiplied with 100, you would get the amount 1200. In this way, you could also find that 60 is the discount. So 60 is the discount and 1140 is the amount received. Let us put in the cash book. Amount received is debited 1140, bank column because it was from check, and 60 was the discount. It should be recorded in the same row, 60, discount allowed. The next transaction is December 28, paid wages by cash 840. This is the amount of wages paid. So it should be recorded in the credit side in the cash column 840. Let us go back and check the last transaction. December 29, paid Linstone by check in full settlement. Okay, आओ बोलना भाई एखान থেকে একটু কেটে দিন December 21, paid Linstone by check in full settlement of an invoice 1420. Payment was after taking 10% cash discount. Here you can see that the check has been paid, but the check amount is not given like it was given in December 23. Here the invoice amount is given 1420. So it is a very easy calculation. You have to apply 10% on the invoice. That will be the discount, and the rest amount will be received by check. So let us calculate what will be the payment received. The payment received will be 1420 invoice amount less a 10% discount on this value. So the amount is 1278, and the rest amount will be the discount. Let us put this now in our cash book. 1278 is received from check, and you know the total bill was 1420. So 1420 less 1278 means 142. This is the discount. Now we have put all the transactions. Let us now total the cash book. You can see there was a greater amount in the debit side for both cash and bank. 2420, 2565. This has been also put here. And now you need to find the balance CD. That means you have to balance the account. The difference figure in the credit side will be 280 and 737 to match with this total amount. You need to remember one thing. Many students do the mistake. They also find the balance CD of discount column. Remember, the discount column balance CD is not to be calculated. You just need to total the discount columns, and that's all. You just need to balance the cash and bank column. So let us now bring the balance down to the next month, January 1st, 2020. Balance brought forward. CD is the opposite of BD. So we write it in the debit side, and the amount is same, 280 and 737. In this way, you get the full marks from question 17, 15 marks. Question 18. Nayat provided the following information at 1st January 2019. The information is motor vehicles, cost price given, and the depreciation for the motor vehicle is given 16,000. On 30 September 2019, Nayat sold a motor vehicle for 13,250. This is the selling price of the motor vehicle, and received a check in full settlement. This motor vehicle had been purchased on 1st July 2018 for 16,400. That means this is the purchase price of the motor vehicle sold. So this is the cost price of the motor vehicle that has been sold, 16,400. That means this amount is not anymore included here. This should be deducted from the cost because this motor vehicle is no more existing. The total cost of motor vehicle now is 31,600. Inayat's policy is to depreciate motor vehicles at 25% per annum using the reducing balance method. A full year's depreciation is charged in the year of purchase, but none in the year of sale. That means for the assets sold, there will be full depreciation in 2018, but no depreciation in 2019. Because in 2019, it was sold. And full depreciation for 2018 as per the company policy, regardless of the date when it was purchased. So what is the method of reducing balance method? You should know that the method is cost less accumulated depreciation multiplied with the percentage. This is the reducing balance method formula. Let us now look at the requirement. This is our requirement. Prepare the provision for depreciation motor vehicles account for the year ended 31st December 2019, showing the transfer to the income statement. Balance the account at this date and bring the balance down at 1st January 2020. That means you have to do balance CD and balance BD to obtain the full 5 marks. This is the column given in your answer booklet for the provision for depreciation of motor vehicles account. Let us start. First, there is balance BD. Remember, balance BD is kind of liability, because provision is always a liability because it is an uncertain amount and liabilities are credit. That's why the opening balance starts with the credit. What would be the amount? The balance BD includes the previous year depreciations. Let us check what is the previous year depreciation given. The balance is given at 1st January. That means this was the depreciation up to the 2018. So we should include this amount as balance BD. 16,000 balance BD. The next entry in this account is the disposal. Remember, disposal means the depreciation amount of the motor vehicle sold. Disposal. Why it is debited? Because it should be reduced from the business. This asset is no more held, so the depreciation should not be included. That's why it is debited to exclude. This is a normal journal entry. Provision for depreciation account is debited of the disposal amount, and there is a credit entry as well in the asset disposal account. You know, in accounting there is double entry, both entries. So just for your reference, we are showing this journal entry. When an asset is disposed, you need to do the journal like this. Debit the depreciation amount and credit the depreciation amount in the disposal account. But what is the disposal account? Let us calculate and look. This was the depreciation method. The cost of the motor vehicle sold was 16,400. There is no depreciation for the asset in 2018, so we deduct with 0. Many students do the mistake here. They deduct 16,000. Remember, this is a depreciation for the 2018, but here we are finding the depreciation for 2018. 16,400 less accumulated depreciation. There was no accumulated depreciation for 2018 because this motor vehicle was already purchased in 2018. In the year of purchase, there is no depreciation. The depreciation is from the next year. So we deduct 0 and apply 25%. The percentage given. In this way, you get the depreciation of the motor vehicle sold 4,100. So we put this 4,100 in the provision for depreciation account. You need to remember one thing also. This 4,100 should also be deducted from here, because 16,000 already included 4,100. Now this depreciation is not included here because this asset is already sold. So the actual provision for depreciation for 2019 should be 11,900. The next entry in the provision for depreciation account will be the income statement, and the date will be December 31st, because the final accounts are done at the year end. Why income statement is credit? It is credit in the provision for depreciation account because the another entry was debit in the income statement account. Expenses are debited, and it is the current year depreciation. Here you should include the current year depreciation. Depreciation are expenses, expenses are debit, that's why income statement is debit, and the opposite entry is in the provision for depreciation account. So according to double entry, if one is debit, another is credit. And the amount we need to calculate for the current year depreciation. Let us go back and calculate the current year depreciation. The formula was cost minus accumulated depreciation. In the current year, the existing motor vehicle is 31,600. This is the cost, and the accumulated depreciation, that means the previous depreciation of this amount of motor vehicle, is 11,900, not 16,000. 16,000 also includes the depreciation of the disposed asset or the sold asset. That's why 11,900 is deducted according to the formula cost minus accumulated depreciation. 31,600 is the cost, accumulated depreciation 11,900, and multiplying with the percentage 25%. So in this way you get the depreciation for the existing motor vehicles 4,925, and this is the amount that should be included in the income statement. 4,925. The last thing was to balance the account. Let us do the total. The total will be 20,925 in the credit side. So there is a difference in the debit side, and that will be written as balance CD 16,825. What is this amount? For your information, you should know that it is the total or accumulated depreciation of the existing non-current assets. This amount will be written or recorded in the balance sheet, statement of financial position, in the provision for depreciation column. Finally, let us bring the balance down at 1st January 2020 to get the full marks. We brought the balance down, CD becomes BD. In the opposite side, the amount is same, 16,825. Now let us move to the next requirement. The next requirement is to prepare the disposal account, showing the transfer to the income statement. This is the table of disposal account already given in our answer booklet. To prepare the disposal account, you need three informations: cost of the asset sold, provision for depreciation of the asset sold, and the selling price. The difference figure will be transferred to the income statement. In the disposal account, debit side records the cost and credit side records the benefits received from the non-current assets. So first of all, record the cost. The cost of the motor vehicle given was 16,400. So you can see from here, motor vehicle had been purchased on 1st July 2018 for 16,400. This is the cost, and because it was sold on 30 September 2019, that's why the disposal account includes the same date. You should also know why the motor vehicle is debited in the disposal account. It is debited in the disposal account because the non-current asset had decreased. A decrease in asset is credited. So If one entry is in the credit, the another entry, double entry, is in the debit side. That's why asset disposal account is debited with 16,400. Let us look at the next entry. The same day, September 30, provision for depreciation 4,100. This is the amount of depreciation of the asset sold. We have already calculated here. Why it is credited? It is credited because usually increase in provision, which is a liability, is credit. But here the decrease in provision has occurred. So a decrease in provision for depreciation is debited, and the another entry should be in the assets disposal account with the credit amount. That's why in the asset disposal account you credit 4,100. The next entry is the amount received from the asset sold. This should be recorded as cash book 13,250. This was also given. The motor vehicle was sold for 13,250 and received a check in full settlement. That means the amount has been received. That's why we write there as cash book. The amount has been received. That's why it is written as cash book 13,250. This amount is also benefit from the asset sold, so it is credited. Another reason for doing the credit is bank amount is debited because amount is received. So the asset disposal account should be credited. According to double entry, if one is debit, the next entry should be credit. Now you need to do the total. You can see the total benefit received is 17,350. You need to know that profit occurs if cost is less than the benefits, and loss occurs if cost is greater than the benefits. You can see the cost of the motor vehicle sold is 16,400 and the benefit is more, 17,350. So benefit is more than the cost. That means a profit has occurred, and the profit or loss is transferred to the income statement. That's why the income statement is written and the date should be December 31st because financial accounts are prepared at the year end. The amount is difference figure 17,350 less 16,400 gives 950. The last requirement from question 18 is Nayat is considering purchasing a computerized accounting package. You need to evaluate the benefits of this proposal. That means you have to write the benefits of purchasing a computerized accounting package. Just writing the benefits will give you 2 marks. If you explain the benefits, you will get another 2 marks. And finally, for a conclusion, you will get 1 marks. In this way, you will get the total 5 marks. Let us look what is the answer given. The first point you can write, it will improve the accuracy, as all calculations will be done automatically. The second point is given here. It will improve the speed of processing financial data, as Nayat will only have to make one entry and the another entry will be automatically processed. Let me show you how it will work. Here you can see the accounting software. The current asset is bank have 10,000 and fixed assets we can see fixtures and fittings has 10,000. Now let us do a journal entry. We do a journal entry of payment. Payment will be obviously made from bank or cash. Here we make the payment from a Standard Chartered Bank. The payment will be regarding fixtures and fittings. Amount purchase will be 5,000. So you can see here, previously it was 10,000. Now it is automatically showing 15,000 debit. So this is the check number. We do not need check number now. we just put here, we put the narration. What is the narration? We purchase fixtures and fittings through cash. No, it will be through bank. Being purchase of fixtures and fittings through bank. So we have done the transaction. You can see only one transaction is done and others are automatically adjusted. You can see the current asset is now less, fixed asset is more. Fixed asset is already showing 15,000. You can see the current assets which was bank 10,000, it is now showing 5,000. So this is how the accounting software works. So if you write these 2 points, you will get 4 marks. Let me give you another point which is not given in the mark scheme. You will also write it will reduce the work of accounting staff because less employees would be needed. So it would be cost saving in the long run. However, the purchase cost of accounting package would be very high. This may be a negative point that you may include. The purchase price of the accounting softwares is very high. So this may be a disadvantage. Finally, you have to include a conclusion that whether Nayat should purchase the computer's package or he should not purchase. Here it is written, as a result, Nayat business should benefit from this purchase. So finally you get 1 marks, and that's all for the question 18.
Follow us on social media: Facebook, YouTube, Twitter, Snapchat, Instagram, and LinkedIn. So don't be late. Enroll to your desired courses and let Bizuz be the guide to your dream grades.